Next one up here, Elon Musk is trying to highlight the value of robotaxis could bring. This should be interesting.
Around its self-driving technology, just months ahead of its robotaxi launch, which Musk says is coming on August 8th. In the meantime, Tesla co-founder and former CEO Martin Eberhard told investors at an HSBC summit in Hong Kong overnight that he is amazed, in his words, that Tesla gets away with rolling out autonomous driving, given its history of fatal accidents. Again, those were in his words on this. The stock was up about 5% just on the idea that robo-taxis are coming in August, and that's something that we're going to be talking about right now. Joining us to discuss this is Tom Narayan, who is Global Autos Analyst at RBC Capital Markets. Tom, thanks for coming in today. Sure. So this was pretty big news as far as the market was concerned, the idea of these robo-taxis actually having a date.
Yeah, definitely. I think it was a surprise, but I don't think it was a surprise for investors who are long Tesla stock, or certainly sell-side analysts who have buy ratings on it. It's about 60% of my valuation, and has been for over a year, is robo-taxis, or really it's autonomy. So that includes FSD to some extent. Right. So yeah, I don't think it was totally surprising.
Self-driving for those uninitiated on the FSD.
Right. It's like a level 2 plus assisted driving, and then robo-taxi is completely level 4, drives you completely.
The idea that it's coming in August, does that hinge on that valuation too? Or is this something that you could be a little flexible with that timeline? Because that's been the knock before, that timelines are laid out and then not met. If that timeline's not met, do you still think the same thing about your valuation call?
Yeah, I do. I mean, my valuation's based on a 2040 year revenue target, and then I discount that back and I apply a multiple there. It's similar to FSD, which is like a 2030, 2035. Mm-hmm. I mean, if it's August 8th, 2024, if it's next year, I mean, robotaxis aren't going to be mainstream for a long while.
Right.
I do see why he's doing it, where, I mean, he's trying to highlight the value of that this could bring. It's huge, right?
But when do you think it could actually roll out on the streets?
We have a robotaxi service in San Francisco with Cruise and Waymo, right? Mm-hmm. I don't think it's going to be in some big scale anytime soon.
Right, but the difference, I'm curious if you agree with this. There is a view among those in the sort of engineering community that the reason why the Waymo and Cruise products work is because they use LiDAR right now. You roll your eyes, but I'm just saying this is the whole thing. LiDAR, by the way, is effectively like a laser that's pointed at different places, and that gives you feedback about what's actually around you. Elon has decided he wants to do this solely with cameras and without the radar. It's just a completely different approach. And as a result, there are some people who have a view that that is not fully ready for full prime time, full self-driving. Right. And that's the whole question. And so my question to you is, do you believe that the robo-taxi version of the Tesla is running solely on cameras, or somehow is a shift in strategy?
I could envision him pushing cameras initially. That's what FSD is based on. Could he capitulate on that and pivot towards using LiDAR eventually? Sure. Right. I mean, he's changed his mind before on things.
That's a longer delay, though, just in terms of getting things out on the street. If you're going
I mean, it could depend on where we have this product. Is it geofenced? What cities? Where is it? Initially. But at mass scale, we've heard Mobileye is a company that has a product that's building with VW, the ID Buzz, that uses LiDAR. So, I mean, we'll see. It adds a layer of redundancy. Theoretically, it's not 100% necessary. But yeah, it depends. You'll have to re-engineer cities to make this work in the future. You can't drive.
Re-engineer cities how?
Well, like, imagine a robotaxi in the Champs-Élysées right now, right? The Arc de Triomphe. It's impossible. So some cities, I mean, they're already doing that in New York, banning private cars in certain streets. You have it on Oxford Street in London, where only certain types of vehicles, some pedestrian areas are separated. Cities are going to change dramatically in the next several years or decades. Regulators are going to mandate that we use these things because they save lives.
So, yeah, he does bring out good points there. One of the issues I've seen with the self-driving testing it over the weekend was in construction areas, in terms of like people put up temporary construction signs, right? Like, for instance, I'll give you a specific example. Usually you could take a left at this light, but there was a specific sign up the construction crews put that you couldn't take a left there, right? Well, the Tesla didn't pay any attention to that sign. It just still took that left, and it was like, I'm going, okay? So those are situations that maybe can be fixed over time, but sometimes those are like smaller signs that aren't usually there. So then the car's going to have to tell, is that like a real sign? Is that not? And kind of, differentiate that. So that's kind of another step. And that's where we talk about this last 1% to 2% of driving, which is these weird situations you get in, right? Where something has to be done and the car wants to do something else, right? So now I was speaking to a couple other Tesla owners over the weekend who aren't not Tesla shareholders, they're just Tesla owners. And they were both very impressed with the latest FSD rollout. Both of them are really happy with the progress that's been made there, right? Neither one of them said it was perfect, as it's not, right? But it's clear as day, like people are very impressed by the latest Tesla FSD. And I just wonder, with how rapidly it's getting better, like where are things going to be 6 months from now, a year from now, when it comes to FSD, if things are getting this much better, this rapidly. So that's pretty exciting, and that definitely makes you feel a lot better about timeline and in terms of getting robo-taxis out there, and in terms of FSD being, nearly a complete project.
There have been problems along the way, though. And
even though technically FSD is never going to be a complete project, right? Because it's not like you get done and then you're like, that's as good as it's ever going to be. No, Tesla's going to keep making it more perfected, more perfected, more perfected.
The former CEO and the co-founder of Tesla pointed out, look, there's surprises. It's not just Tesla that's had the issues with this. You've got GM kind of rolling out their taxis with safety drivers now in it because of accidents they've run into, too. Grand scale, is it going to be safer eventually? Probably. You have people who cause accidents all the time, but the liability factor is a huge one that is going to weigh on the manufacturers of all these cars.
Sure, and that's been the real overhang of the difficulty. BMW always says the moment there's a headline that says BMW kills human, we're finished, right? But the reality is this it'll save 2 million lives a year.
Right,
100 million
of being the one that kills
Sure.
somebody. I mean, there's still the legal framework you have to live within, and the outrage of the family that loses someone.
But what about the outrage of the 2 other million people who die, right? So,
but let me ask you this. I've asked Elon this question specifically and personally, which is, what is the politically palatable number in your mind in America of people who are going to die because the computer effectively is going to malfunction? That is actually the fundamental question. So right now, if you believe that 40,000 people die in a vehicle every single year in America, if I told you that 5,000 people were going to die every year in America, but a computer was going to do it because it malfunctioned, would you say that's a good outcome? Would you say that's acceptable to you? I don't know. That's why I'm saying it's not so clear. If you got the number from 30 to 20, I don't think that would be politically palatable. Right. So if you got it from 30 to 200, that might be politically palatable.
We know that 94% of accidents are caused by human error, right? So that number won't go from 30 to 5,000. It'll be a lot smaller. We have to remember other industries that's happened. Aviation, there were tons of crashes early on. Trains. And over time, those reduce significantly.
That's the Spockian view,
Right.
Dr. Spock view of all of this. But logic doesn't always prevail when you are talking about, and when liability comes and there are deep pockets of a manufacturer behind it, that's what the lawyers will go after. And for the family that loses it, it's, I understand the Dr. Spock mentality, but that's not how things play out in reality.
It'll be difficult early on, right? Yeah. But we'll get there eventually. Plus, look at China. They're moving full steam ahead with this, right? That's a Spockian view, and it works.
It is, and that's the way when you have centralized planning government, that can kind of roll into that.
We'll get there.
So it was interesting. I could have easily been in an accident last week. I was driving. The car was not driving in this situation, but essentially I needed to take a left. I was parked at this light. Okay, the light was red. I was eventually going to get a green arrow, and I'm going this way, right? Well, this is like one of those setback type situations where I'm like back here. It has you kind of sit back here. And then there's cars right here, cars right here. So I don't have a clear line of sight over here. So my light turns green for the arrow. And I was like, I'm just going to give it a second or two before I go. And the reason being is I was afraid somebody might go this way and take a left on red. Sure enough, I wait my second or two. I start proceeding. And somebody freaking took it. And I stopped the car, and I'm just like, if I had went right away, as soon as that light turned green, I would have got, boom, nailed by that person because they freaking ran a red. So it's just like, those are those other little situations that, most human drivers aren't going to do. And let's be honest, if that lady was in, she's on her phone and everything, if that lady is in a robo-taxi, it never takes that left on red. If anything, these Teslas are go drive way safer than a human does, right? It wouldn't do something stupid like that. And so that wouldn't have to be an issue. But because humans do stupid stuff and they run red lights and do stuff like that, I have to drive extra careful just so my kids don't get hit. And it's just like, those are those crazy little situations. So next one up here, Tesla and Apple.
Google today is a clear example of it. Deirdre Bosa joining us now with a look at why it's not just the stock decline that each of these two tech darlings have in common right now, Deirdre.
That's right. Good morning, Sarah. So it's time we should maybe start thinking about the Fantastic Five. It was the Fabulous Four for a little bit as well. But Google has really made its way back into the mega cap winners with its 12% rise over the past month. And that leaves Apple and Tesla still out of the group. Today's performance from both those names underscoring that new dynamic. Shares of Tesla, they are sinking after laying off 10% of its workforce. And shares of Apple, they're also dipping on reports of weak iPhone shipments. Zoom out, the bifurcation is even more pronounced, though. They're the only two that are still in the red for the year. And it is not just that stock decline that they have in common. There are a surprising number of fundamental parallels between the two. Both companies facing increased competition from China. That is hitting top-line growth. For Tesla, it's NIO, XPeng, BYD, among others. Today's layoffs, they're in response to that, falling sales, price wars, and the share decline today. It suggests that Wall Street is seeing...
Come on. NIO? You're going to mention NIO in there? Come on. NIO's under $4 a share. Come on now.
Layoffs as a response to shrinking business rather than the push for efficiency that has helped push other mega caps higher in terms of their stock price. Meanwhile, new numbers from IDC this morning, they show that Apple's global market share of smartphones, they're giving up ground to Chinese players as well. There's Xiaomi, Transsion, Oppo, Huawei as well. It's a combo of soft sales from the latest iPhone model last September and Beijing's ban on foreign devices in the workplace. Now, another thing that Apple and Tesla have in common, both have reportedly killed major projects. There's Tesla's mass market car, Apple's own attempt at a car. Musk has denied that report. Apple hasn't commented. And in this kind of fascinating link, guys, to both of them, Xiaomi, one of the top Chinese smartphone players, launched an EV last week, doing something that sort of confronts both those names. On the flip side, they both have opportunities on the horizon to win investors back. And
people don't understand the chess game that Tesla's playing. I'll explain in just a moment, okay?
Stakes are high. Apple's chance will come first on June 10th with its annual developers event. AI will take center stage there. Tesla's catalyst could be in August with its robo-taxi reveal, which Morgan Stanley says could set the tone for 2030, and beyond. Now, Musk has promised robo-taxis for years, though, and Apple may be playing catch-up in AI and have to prove that this is going to be more than just an AI upgrade cycle. In both those cases, though, guys, the stakes are high, and they've set the bar high for themselves after a period of, let's call it, underperformance.
So people do not understand the chess game that's going on for Tesla right now. Musk and the team's thinking years ahead, okay? Let me break this down as simple as I possibly can, okay? First off, the whole Tesla doesn't want to make any cheaper vehicles. Baloney. That doesn't make any sense. Of course they do. They want to come out with a model that the masses can afford. Like everybody in the middle class can afford that vehicle, right? Something under 30K, boom. I mean, it's going to be ridiculous in terms of the volumes they can move there, right? Now, why would Tesla want to sell a ridiculous amount of those sorts of vehicles? Let's say it goes into production 2026, which I think is pretty realistic. There's been talk about 2025. Let's say it's 2026. That vehicle goes into production. Why would Tesla want to move a huge amount of units? People might think, well, it's just a lot more revenue, right? A lot more profits. No. Something much bigger going on here, okay? Tesla wants to move that many units, so at the end of the day, robo-taxi opportunity, right? Which, if you are experiencing FSD, the new version, I mean, I can only imagine where FSD is going to be a year from now, 2 years from now. I'm fully confident that in 2026, these cars will drive a million times better than a human. Like, it's not even going to be remotely close, okay? So you're looking at a situation here that Tesla could say, okay, let's build out all the vehicles for the robo-taxi fleet, or we can remain more asset light. The people can buy the cars, right? And then those same people can manage the fleet, can have their cars drive around and make them money when they're not using them, right? Which most of the time people aren't even using their cars. They're just sitting around. Like the far majority of people don't even use their cars hardly at all. Like of let's say over a given week, how much time do you actually use your car? Maybe a few hours. Maybe a few hours you actually use your car. And that's a majority of people out there, right? Out of an entire week, 24 hours a day, times 7, and you're using it for maybe a few hours each week, maybe 5, 10 hours, something like that. So your car's just sitting there idly for all that other time. Why not make money from that, right? Now, Tesla could say, okay, let's just make all the cars and let's have all our cars, Tesla cars, robo-taxi, and we'll make all the money. Sure, but then you're going asset heavy. Now, you got to come out of pocket $20,000 per car. Let's say that's the production cost of the robo-taxi type car, right? Versus you could have somebody else buy that car for, let's say, $25,000, $27,000, $29,000, something like that, right? Then you take a fee off that whenever it's being used for the robo-taxi opportunity, right? They're the ones that manage it. They're the ones that got to worry about keeping the cars clean and keeping them in good shape. You don't have to worry about that. You don't have to worry about managing the fleet. You're just taking a fee off of all that, right? Which keeps you much more asset light rather than asset heavy. And instead of having billions of dollars or tens of billions of dollars of your own robo-taxis out there, then you've got to worry about cleaning them and keeping them charged and all that stuff. Instead, those cars are managed by other people. You don't have to deal with any of that crap, right? So that's a game of chess that Tesla's playing here. Now, in regards to Tesla, is a stock a buy? Absolutely, as long as you got a long-term vision, right? If you're hoping Tesla's going to be 200 tomorrow, it might not be the stock for you. But as long as you got a long-term vision here and you're playing for what this opportunity is over this next 5-10 years, yes, it's a buy here. In terms of Apple, it's funny because I've been negative on Apple for quite some time, and I'm actually starting to turn more positive on Apple. And the reason being is they've been losing market share, and there's a whole, bad kind of sentiment around Apple right now. They've gotten very lucky that big tech's done well while they've been doing bad. But in regards to Apple, I'm actually bullish on Apple for 2025, 2026. And I'll tell you why. They're coming out with a bigger iPhone. It's like 99% sure they're going to come out with a bigger iPhone next year. And because of that, I think units are going to increase dramatically. And I think market share in China could actually reverse in 2025. We know the Chinese love big iPhones, right? As Americans do, almost everybody does. And so don't be surprised if there's a new excitement around Apple next year, right? Not this year. It's a down and out year for Apple, kind of like Tesla. But next year and beyond, I think things could get actually much better. So, I do not own any Apple shares right now, but I'm actually turning more bullish on Apple for 2025 and beyond. In Nvidia, let's talk Nvidia and if this stock's an opportunity.
Arya joins us now, maintains a buy rating on Nvidia, price target of $1,100. So, Vivek, do you see this as just
9 hours left,
to cool down?
9 hours left. Pin comment. 9
I think,
hours
Sarah,
left.
This is the 9th or 10th time in the last 2 years we have seen Nvidia stock have a 10% or so correction. And every time it has done that, it has inevitably been a good opportunity to relook at the stock because
he's got a price target of $1,100 on Nvidia stock. Obviously, considerable upside from here. We can call it, $250 roughly?
Fundamentally, what's happening is that we are going to have at least a 4+ year build out of the AI deployment infrastructure.
That's important.
Across cloud service providers, across enterprises. We are
4+ year build out. The last year was the first year, so we're in the second year. So that means Nvidia stock has at least another year to run, if not 2 years, before let's call the next big down cycle for Nvidia. That's very important.
The second year of those 4 years. So anyone who is trying to call this as a peak, in my view, is being too premature. So the size of the opportunity is growing. It can be 250 to 500 billion annually. We are still less than 100 billion of that. So size of the opportunity is growing. Second, their pipeline is extremely strong. Today, a lot of the AI infrastructure has been built on a product that they conceived it during the COVID time. Generative AI was not even a thing at that time. It's really the new product Blackwell that is coming out that we think is really custom designed for generative AI and that will just start shipping in another quarter. So larger opportunity size, a much stronger pipeline. And then the third and most important thing is valuation. We think Nvidia is the cheapest large cap growth stock in our coverage. It's selling for under 30 times for an earnings growth rate, which is 40% plus, right? The S&P 500 is trading at 2 times price to earnings growth ratio. Nvidia is less than 1 time. So we think increasing size of opportunity, better pipeline, and a very compelling valuation. And volatility is just, part of the game here.
Wonder if investors are worried at all about competition. Vivek, we got that news yesterday from Google announcing its own sort of ARM-designed CPU chip. Is that a threat here to names like Nvidia?
Yeah, I think competition is going to be there since the AI market started. We have seen custom chips account for about 10 to 15%. Nvidia has consistently managed to keep 75 to 80%, and we have seen nothing that changes that view. Google has been designing their internal chips, actually designing in collaboration with Broadcom since 2017. And since 2017 to now, Nvidia's data center business has probably grown 20 to 30 times. So Google designing their own chips, I don't think is anything extraordinary. In fact, the CPU part that they are designing, CPU is something that Nvidia doesn't even sell to them. So I don't think that CPU announcement really should have had any implication on Nvidia. The other interesting thing that I think sometimes
100%. Just people don't really understand how these markets work. They just hear a headline, they're like, buy.
Forgotten is that if you look at who is ahead in terms of monetizing generative AI and large language models, it's companies such as OpenAI, Microsoft, Meta. And if you look at who has been the largest adopter of NVIDIA chips rather than custom chips, it's OpenAI, Microsoft, and Meta, versus others who have relied more on internal chips. So is that just a coincidence, or is that really a correlation between the faster adoption of NVIDIA products and the success that these customers are seeing in the monetization of their generative AI infrastructures?
So do you think that their hyperscaler partners, the ones that are spending all this money on AI, will be able to go elsewhere to another competitor or develop their own like Google's doing?
Yeah, I think that we will continue to have this mix because there is just a wide range of workloads, right? The large cloud companies have internal workloads, for example, search, monetization of their video infrastructure. But then they also have public cloud workloads, which are faster, which are growing. That is where enterprises are working with them to set up their own generative AI training and inference. And that's the part that NVIDIA does extremely well because it has this really large base of deployed hardware based on their CUDA operating system. And that is what incentivizes enterprises to come and ask for NVIDIA-based hardware when they come to these public clouds. But I think the big picture view is that accelerators is a $100 billion market. We think it doubles in the next 3 years at least. And in that, NVIDIA maintains 75, 80% market share. And we think that the rest of the industry will have 20, 25% market share. So there will be a range of choices. But I do think that it's a large and fast-growing market. And NVIDIA's competitive position is getting better.
So is NVIDIA stock a buy? Let me show you something very important. So, is NVIDIA stock a buy? The answer is yes, absolutely. And the reason being, you look at the forward P on the stock, right? It's 1000x. Obviously, you guys don't have access to this. This is my own tool and software I've been building out for quite a while now at this point in time. But, you look at the forward P of the stock, we're at 37. First off, that's taking all analysts kind of, what they're expecting here for the company to have for EPS, which analysts have been incredibly wrong on NVIDIA, and they're likely way too bearish. NVIDIA's reality forward P is probably at 31 or 33 right now, right? So higher than most stocks traded in the market, but the company's also probably going to grow 10x or over 10x. The revenue growth of, let's call it, companies that are also competing, with NVIDIA, or let's just call it companies in the stock market in general, right? So it should be trading at, you can make an argument that it should be trading at least minimum of 5x on a forward P basis, what an average stock is trading at in the market, right? And when you think about it from the context of these cycles, and I've explained this, in many videos in the past in regards to NVIDIA, these type of chip cycles, these super cycles, these usually last for 3 to 5 years, right? You heard that gentleman right there talking about this is a 4-year cycle. We're in year 2 of that cycle, year 2. So we have a bit to go here in regards to this kind of super cycle, and you don't actually know where the top is. The top will probably be hit in the next 2 or 3 years, but we don't know where that top is. And so from this standpoint, and we also don't know what products NVIDIA is going to come out with over the next 2 to 3 years, that's going to give them the next layer of growth and next layer of growth. And we also know NVIDIA is just about to start making bank from software, right? And that's going to be a business that grows substantially over the next 2 to 3 years, from a business that is nothing to actually a substantial business probably 3 years out. And so therefore, NVIDIA still has a long runway of growth I've been telling people this. I believe people are going to be paying $1,000 for Nvidia very shortly here. Then they're going to be paying $1,200, and then ultimately they're going to be paying $1,500 for the stock. And it's not like that far into the future when they're going to be paying these prices. So, it's always possible Nvidia lays an egg and the business starts to decline or something like that, but it doesn't look practical. It doesn't look like it makes sense. Remember who's Nvidia's customers? They're the biggest, strongest tech companies in the world, and all those companies have already kind of given their budgets, and they're all allocating a lot more toward these sorts of chips from Nvidia. So are they going to magically not have the money to pay Nvidia for these chips? No. Are they stuck having to get these Nvidia chips? Yes. Why? The reason being is all their competitors are doing it. If you want to get behind all your competitors, then don't buy these Nvidia chips. You want to stay above your competition, or at least with them, you got to get these Nvidia chips. You have no choice. It's not like you can be like, oh, let's just skip that. Skip it. And then fall behind all your competitors, and you'll be out as a CEO, and the board of directors is going to vote you out. You have no choice, okay?